What is an umbrella policy? Anything that you own individually, a home, a car, a vacation property, or a secondary vehicles, opens up like an umbrella over it. So that's what the umbrella is, an additional layer of liability coverage that would protect anything that you own underneath it. Not letting your insurance company know is saving you premium, but at the time of the loss, it's not going to save you anything. So if you're not looking at your stuff or updating your stuff or working with an advisor who's going to chat with you about the changes, especially you could safeguard yourself as well, doing extended replacement costs that are offered by certain carriers and also guaranteed replacement costs.
So welcome. Thank you for joining, Kate. We are joined today by Kate Mallows, who is the Vice President of... I'll let you introduce your own title. What is your title?
My title is a personal risk advisor, and I work for Hub International in the private client space.
Private client space. Excellent. And thank you for joining us today. We're really looking forward to covering some questions in and around risk and how insurance can make a difference, both not only in real estate, but in personal risk and making sure that their families or individuals are taken. So the first question I want to ask is, where do families tend to be most underinsured?
Well, people are underinsured in two ways, for their stuff and also for their exposures. Both can be financially catastrophic if they're not insured the proper way.
Okay.
We have seen, let me just tell you a little bit about dwelling amounts, have a replacement costs. Where people bought homes 10 years ago, there's common gaps because they're not keeping up with what the replacement costs are of the houses now, from a cost for supply, demand, and skilled labor has been increasing. So if you bought a house $400,000 10 years ago, it's now, to reconstruct it, is probably around $650,000. So this, again, back to the supply, demand, and tariffs that are in place, it's changing and skyrocketing in those regards.
Okay.
When they're underinsured,
okay,
they could, at a time of a loss, they could not get reimbursed for the amount of coverage that they intend to have when there's a claim. So if you're not looking at your stuff or updating your stuff or working with an advisor who's going to chat with you about the changes, especially you could safeguard yourself as well, doing extended replacement costs that are offered by certain carriers and also guaranteed replacement costs, which will fill that gap for any change in the marketplace.
So let me go back to the question that, around the $400,000 example,
Mm-hmm.
right? We have a $400,000 house and they're underinsured, and now they've had a catastrophic loss and they've basically got to reconstruct their entire house. And now the cost is $650,000. How does that affect them? How are they going to be, now that they've only insured for $400,000? How does that gap get talked about?
It always goes back to the contract. So each carrier has a different contract. Certain carriers will say, oh, well, we can only give you what the limit is on the policy. Uh-huh. So they're out the difference in coverage. So other carriers will give you extended replacement cost, which gives you 25 or 50% over the amount listed on the policy.
Got it.
Or if you have guaranteed replacement cost is going to give you whatever the differential is. So it's going to fluctuate. That number will fluctuate. So if it costs $750 to rebuild that house at today's prices, they're guaranteeing that they're going to rebuild it for that amount.
For that amount.
Mm-hmm.
Okay. Excellent. So really the take home there is to be sure that they have that proper coverage and to chat with you and have you explain to them how important that replacement cost coverage is.
Absolutely. So when we do our reviews or we're onboarding clients, we'll go out to the marketplace and we work for them and sell their needs to the insurance company. Mm-hmm. And then we come back with a risk analysis versus what they have now, and then what they could potentially offer them from a market perspective. But it's always going to be their decision. We're here to educate them and be their advisor.
Yeah, give them the best choices that they possibly can make based upon what their needs are.
Mm-hmm.
How do life events trigger the need for reviews that you do? And I think you do those yearly?
Yes, depending. There's a different service model for each client. But essentially, if they call us, I always want to be that quarterback for them and make sure that they're getting the reviews, and if they have questions about their renewing policy, that they reach out to us. But from a proactive service model perspective, we do it every 6 months, just because folks forget to call us.
Okay.
When they're buying secondary homes, or they got investment properties or rental properties, things change and they have it on Airbnb or VRBO, those structures need to be on the policies that are insuring those structures, and the carriers need to know that. So the policy doesn't just cut out and say, no, we're not going to pay you anything.
Right. One example that I think you talked to me about earlier was in and around renovations to a house. You do a renovation to a house. Let's say we buy a house for $500,000 and you put $200,000 in a new kitchen and an updated bath. How does insurance impact that and in that review?
Great question. You always want to let your insurance agent or broker or advisor know any remodels that you're doing in the property, because if you're living there or not living there, it's going to change the coverage because there's a vacancy clause on a homeowner policy. If you are out of the house more than 30 to 60 days, depending upon carriers, the coverage disappears. So anything, you just need...
So if I vacated a house while they're doing the renovation and I vacated it for longer than 30 days, that...
Some carriers are 30, some are 60. It all goes back to whatever the specs are on the policies, but be happy to review that with them and let them know those differentials. But we don't know unless they tell us.
Gotcha.
Help us help them.
And if they're living through a renovation like we most recently have done, which is somewhat crazy, but can happen, is there any considerations regarding insurance if you're living through that renovation?
Yeah, so if it's going to change any of the square footage of the property, the insurance, we need to advocate for the client to the underwriters to have them get on the policy. So some carriers will do a course of construction endorsement depending upon what the amount of work is that's going to be done on the property. If you're going to live there, how long is it going to take? What's the costs? Those are all the things that we would need to know. And who's the contractor? Are they familiar with doing contracts like this? So we would ask for a certificate of insurance from the contractor, a copy of the signed contract, and then advocate for the client. It's either going to be that the insurance company is comfortable with it, or we have to write a builder's risk policy, which is separate.
Separate from that. Okay, great. Next thing I'd like to cover is real estate ownership risks that clients often overlook. What are some of those? Can you give me some examples and maybe some stories associated with things that went well and maybe things that didn't go so well?
Yes. So things that went well and not well, great questions, and we see them all the time. So
things like floods.
Yes. So so flood
policy kind of thing.
The commonality for flood is that people say, I'm not in a flood zone. Well, that's a misconception by the industry and a lot of different markets is that everyone's in a flood zone. It's just how catastrophic is the flood zone? Is it in a high risk or a low risk? And we can identify those when they're buying properties. So we work with Realtors a lot, helping with that process. But yes, the big ones are flood, making sure that you're in a flood zone or out of a flood zone, because that's going to change and affect your mortgage. And making sure that we get that ahead of time. And we can go for flood, we can go to a private market, or we can go with the national flood, which is the federal market as well, just to give some differentials there. But another one that really slips through the cracks is umbrella coverage.
Like how does an umbrella policy work? And what kind of liability is there associated with not having one?
Great question. And this is my biggest advocate for clients because it can change their financial footprint into retirement if they don't have the adequate limits in place. So to bring it back a little bit, what is an umbrella policy? Anything that you own individually, a home, a car, a vacation property, or a secondary vehicles, it opens up like an umbrella over it. So that's what the umbrella is, an additional layer of liability coverage that would protect anything that you own underneath it. It has to be written accordingly because they have to list all the things. So if you are sued or deemed responsible for something that you have to defend yourself for, the policy is going to give you defense coverage. And it will also give you the payout if the limit is there and they deem you not responsible for the incidences.
So a good example might be if I own a property that's up here in New England and and they have a slip and fall on my property. Would that be a good example of
it? Would. So the homeowner policy, all the underlying policies have a limit of typically $300,000 to $500,000 per exposure. And then if it absorbs that, it will go up to the umbrella policy. And the umbrella policy will give you 100% of defense costs, depending upon what carrier you're with.
Well, attorneys aren't cheap, right? So that would be huge coverage, right? So my next question would be, how do you coordinate with other advisors during transitions? You kind of spoke to that a little bit about when I have a listing, I immediately call you, Kate, and say, is this, what's the risk exposure for a flood in this particular seacoast property that I'm listing? And you always answer that. Are there any other types of professionals that you coordinate with
Yes,
during these transitions?
I would say the most common are the realtors, with making sure that we understand prior to the closing that insurance is a component of the sale, and that if there's some flood coverage, that we need time in order to get the proper coverage in place. And do they want to still buy it with the cost of flood insurance as well? Aligning the same concept with the mortgage brokers is similarly what is required of the loan. Is there flood insurance that's going to be needed in order to close? And then also the estate planners and the attorneys, the closing attorneys. Estate planners, is the property going to be in their personal names? Is it going to be on an alternative ownership like an LLC or a trust or the like? We need to make sure that the policies are coordinating with those ownerships, because if we don't, we're not going to have coverage at the time of a loss.
What are some of the risks that clients rarely think about, but they really should? Can you give me some examples of that? I think you mentioned, water damage, sewage backup.
Yes. Water damage and sewage backup is either limited on their policies or they have none. It can be endorsed onto their policies. And depending, all goes back to, this is why we need advisors, right? So they know and understand the specs of the policy and how they're going to respond. And each carrier has a different appetite. So you're going to get a different spin from each carrier. But essentially, I think it's 30 to 40,000 is max that would be paid out for a standard policy, homeowner policy. But you can increase those limits depending upon what your needs are and what your exposures are, like finished basements. Yeah, there's more exposure to a finished basement than there would be a house that just has a broken pipe in the basement. It's not going to destroy as much.
Right. Okay, that's a great example. Super. So,
misconception in the world of insurance is that you have to pay to have an advisor, but the insurance carriers actually pay us directly, so you're not having to pay out of pocket anything to have an advisor or an agent. But being engaged, I would say that the advisors have, and being with the hub, we have global access and also national reach with our carriers. So it gives us decision making at the table. We have a voice to be there because we're on national contracts. But it's important that you know that it doesn't cost you any more to have an advisor.
That's perfect. And one of the things that I love about Hub, and particularly UK, is that if I have, I'm licensed in Massachusetts, New Hampshire, and Florida. And if I have clients in Florida or anywhere else actually in the country, I can call and just say, hey, I've got a client who's now moving to Nebraska. And I give you a call and you're able to connect me with the right resources. So tell me a little bit more about your not only U.S. reach, but global reach, because we've got clients who are in the Caymans and other parts of the world, and you're able to reach that as well. Tell me a little bit more about that.
I've been with Hub for 12 years, and the reason I love being with them is because there is not a no, there's a how can I get it done. So we are a global company. We originated in Canada, and we came down to the U.S. in the early 90s. And New England was our first hub for Hub.
Literally.
A little hub. But we have access to all carriers, and I'm licensed in all states. So if you're having a house in New England and then you have a secondary in Florida, and then maybe you're benefited enough to have something in Colorado or other states, we can look at you as a program and sell your needs holistically to an insurance company for them to give us better rates. So they typically will deviate rates in certain areas if we can sell the product to the carriers and then provide them with one carrier, one bill versus 100 different brokers to talk to. Wow. At the time of a loss.
Talk about bundling it, right? You hear about that in other insurance firms, bundling in order to save. And you have the ability to do that across not only states, but also across countries.
Yeah, and I think that it's twofold for us on that. It is a bundle to save, but it's also a bundle for an insurance carrier to know who you are and what your exposures are, so they understand who you are as a family and a risk. And then you're only having to go to one person when there's a claim versus going to a bunch of different brokers.
Yeah, that's huge. I imagine that's a huge advantage, and really just a lot of relief from our client's perspective is that I got one phone call to make. I can make that phone call, and you can reach out across those different products, different houses, and whatever assets they may have, and not have to worry about, well, I got to call somebody in Florida, I got to call somebody in the Caymans.
Yeah, I think that's the biggest relief for our families is that we are that one touch, high touch, concierge style approach to folks. And I'm always going to be that quarterback for them. So even if their service model doesn't fit the private client group that I'm in, we have teams that can fit any model.
That's a great question. Then, what other types of products and team members can you rely on in order to be able to best serve your clients? It might not be in the private, high net worth space, but you've got other team members. Who can you reach out to that can?
Yeah, that's a great question. So we have all different verticals within Hub. So that's another reason why I chose them 12 years ago is that I go back to I just need to figure out how, not we can't do it. We have a lot of families that their wealth has been generated through having commercial businesses. So I have a team member that does all of the commercial stuff. And as those needs get bigger, we also have a large commercial insurance program. And that goes in different tiers, right? And then we also have employee benefits. We have specialties within those units as well, depending upon what the exposures are. So we have the teams that we can help out families in no matter what dynamic they get into.
So even if they're a family-owned business that are starting to explode their business and they've got multiple employees and they're doubling their employee count, you have people that you can reach out to help with building and growing that part of their business.
True. And I want to resonate is that we work as an advisory focus. So we're not saying you have to have the sale, but we want you to know what the exposures are and how we can cover them. So, and want to be and grow and move with your family as it transitions through different parts of stages of your life.
Great. So, Kate, we were talking a little bit about inadequate coverage, right? And how that might impact somebody. I have a really good example of clients who are renovating their own personal homes. They don't want to, they're married to their rate, right? They love their low interest rate, but they're renovating their home, renovating maybe a major kitchen, bathroom, and a basement, let's say, for example. And they don't tell their insurance company because they want to save a little bit of money. What are some of their exposed risks associated with that? If they had a burst pipe and they ruin it all, what would that look like?
So, great question. And I'll have to break it down in a bunch of different buckets because not letting your insurance company know is saving you premium, but at the time of the loss, it's not going to save you anything. And I think working with an advisor and letting the advisor as part of your team and your family's team, talking to them and allowing us to give you the right decisions on if this is from a coverage and a premium perspective is always going to be our focus and how that is going to respond at the time of a loss. So you need to, and I can't advocate that any stronger, need to let the insurance company. If you're doing renovations and you're not letting them know, think about the exposures that are happening to your house and why the insurance company doesn't like that you're not telling them. The likelihood of them getting to know is quicker than them saying yes if you're allowing them to let you know what you're doing in the home. So the property itself is getting a lot more foot traffic with people we don't know. You could have things stolen in the house, right, that you don't know about. One of the big construction problems is dirty rags being thrown into regular trash cans outside of the house, causing the whole house to go up on fire. So if the carrier doesn't know, they're going to give you what was existent before they knew that there was a renovation. So things like materials being left on the property that they could get stolen by somebody walking by and saying, oh, they got all these new appliances and no one's living there and they didn't tell the insurance company and I'm just going to take them. Well, there's no coverage for things like that. Or if they're not living in the home when they're doing the construction and the heat isn't kept up to the right temperature and a pipe breaks and they've just finished their downstairs and they're moving up to the kitchen upstairs. Well, that basement needs to be known as completed fully renovated living space on the house for the insurance policy to respond. So there's a lot of likelihood of them saying, no, we're not going to cover it, versus you having conversations with them and saying, okay, what's the best approach on this?
Right. All right. Great. Well, thank you. That was hugely helpful. Any other exposed risks that they should consider?
Yeah. So these days, cyber, equipment breakdown, and increased mold coverage. So think about people that, I'll go to the mold for a second. There's limited coverage on a standard homeowner policy. It's either a $50,000 limit or a $20,000 limit. You can increase your mold coverage, and the reason they don't like to cover it is mold can really do some damage to properties.
Yeah.
So if you don't have those conversations with the advocates and the underwriters about what your need is versus what you want to pay, there's some differences there. So if you have a mold loss, let's say you're on vacation and a pipe breaks and it's the middle of the freezing cold that we're having this winter, and it breaks and it's just flowing out the front door when you get home. Well, it's only going to give you limited coverage, and if that water had been standing for a long period of time, you're going to have a lot more exposure than the $20,000 or $50,000 limit, and you can increase those for very monetary increases in premiums.
Okay, great. You mentioned AI. Now, I think of AI in the business world, and I imagine that has its own requirements and needs. How would that impact someone who's maybe has their own home business and they're working out of their house? How would that AI kind of coverage help them?
From a business, anything on my end is going to be personal, right? So if it changes over to the business structure, we can get our commercial folks in. But a homeowner policy has the ability of adding cyber coverage. Now, it's very minimal cyber coverage, but again, talking to your advisor about and having them dig into what are your needs, what are the costs, and what do you want to pay for. But cyber is a big one, and the equipment breakdown. Equipment breakdown, just to highlight what that is, any mechanical piece of equipment in the property that runs the home would be covered on the homeowner policy if you have the endorsement up to whatever limit you choose. Standard limit is $100,000, and you can buy up to $1 million. But what that does is, let's say a common water heater rusts out on the bottom and floods the basement. It's going to cover the damage it causes, but it's not going to cover the water heater. Having the equipment breakdown coverage will give you the water heater. Another way that it gets used very often is some folks have 2 to 3 AC units that are in their homes, or they have a heated pool and a jacuzzi. So all of those breakdowns are, depending upon what they are considered an equipment breakdown.
Well, thank you, Kate. I appreciate you joining today, and looking forward to continuing to work with you at Hub International. And thank you for joining us on our podcast today.
All right. Thanks so much for having me.